Good evening, traders. It's Simon here with your week review. This week again we're going to look at the dollar to start with, and to say one thing, last week I believe we got every single direction predicted correctly. Even pairs we don't normally analyse properly, we actually got them correct as well. So let's go through bit by bit. Weekly chart on the US dollar from FXCM shows you a little pin bar here, looks like it's going to fall down. I know we're at a key level on the weekly perspective, but I believe this pop up inside bar and the move down is actually going to drag us through this key level to at least the daily 50 EMA here. That's actually been more stronger than this key level. So my target for dollar short positions would be to this daily 50 EMA. On the DXY chart itself, very similar story. We're now approaching this box again, which we've had to deal with quite a bit in the past. But again, though, when you look at the weekly chart, you can see this pin bar forming. So at least some movement to the downside I'll be expecting this week. When you look at other pairs itself, you'll see the higher volume rejection candles happening on the daily chart, and you can see today's bearish dollar moves have been on higher volumes. They've been confirmed as well. So we actually took in the end I took a trade on Aussie dollar last week. I know I liked Kiwi dollar more, but it didn't do anything on the Monday I liked. It's bank holiday in the UK, but it just didn't do anything. And ironically enough, the Aussie dollar looked like it did a little bit better. When you look at on this Aussie Kiwi itself, you can see how the Aussie did start to move up, the inside bar then started moving up again on the Aussie Kiwi, which said to me Aussie was slightly bit stronger than the Kiwi itself. So that's why I went with Aussie dollar. So I'm expecting now a move to come up to 0.7 this week. I am at some point. My target itself is 0.7, the daily 50 EMA. Just want to get there because there's a key level here, free touch key level. Daily 50 EMA would be cut there. I know not being tested properly, but for me personally, I don't want to risk it in and out style trading. So let me just show you what I've taken on that trade there. There we are. So this is my initial 1 hour trade. So I took the trade, it came up, it came back down to test the 1 hour 50 EMA very nicely. Obviously, you know, I wanted to test the downward sloping trend line. Never happened at all, wasn't going to happen. So that was it. Then when you look at this on the 4 hour chart as well, multiple test the 4 hour 50 EMA, and notice at the bottom with the volume there. What I want to show you now, guys, is this is the move, this rejection candle, higher volume. Look at the candles, high volume, high volume, high volume, high volume. Bullish engulfing candle, super high volume, inside bar, small volume. So for me personally, the inside bar is not a valid inside bar. It'll just be a little breather, hold up for the weekend at the moment, and all the volume pointing to the upside now. So this was my entry there on this 1 hour on the 27th of May is when I took this trade. And yes, we're targeting this area here. So there's almost 2% trade there. Safe stop below the lows as I was looking for in the past. So I'm happy with that. Like I said, I never took Kiwi dollar. It just didn't do anything at all. So euro dollar now. So we did say last week we didn't want to buy into this and waited for a bit more pullback to value. And what's happened is we pull back to value inside little doji candle, then bullish engulfing candle to the upside. Now what I had done was I saw this happen today later a few hours ago. And what you can see on the 1 hour chart is this. What happened is price moved up the 1 hour, come back down. Here's your inside bar testing the R1 pivot and the 1 hour 50 made double bottom pattern there as such. I did like that, and I did take along on that position, which I know you're going to think is quite strange for me to do so. But what I liked about this trader was the fact we was at the bottom here testing this 1.113 level. It looked quite nice to take a trade in it, so I put my stop below the lows here. And my trade was something along the lines of this. It is like that. Only targeting 1.12, so I'm only targeting this. Only just about 1% it is at the moment, so I want to target no more than that. I'm happy just to take that kind of snippet of trade. That's the safest. The reason why we got this daily 50 EMA downward sloping trend, as we said before, I don't want to trade for the 1.12 area, so just in and out on this trade really. Another 1% or so profit, that'd be quite nice for me. So at the moment I'm running about 0.5, 0.6% profit on this trade. Pound dollar. Now you did say last week was a bit concerned about the pound itself. However, it was putting some bullish signals in, and we did mention 1.26. We didn't like it. Remember I said, for example, pound Swiss was bad. It's just dropped down again. Pound CAD looked okay, but not that strong. It's only just moved around a little bit. Pound Aussie as well has just decelerated but done nothing at all. So buying the pound was a bit silly really. Pound yen the same as well. So if you see where pound yen is now, just an example, 136.0 is the key level. I'll be looking for some buyers there. Maybe we'll have a look though. But going back to pound dollar, what I like about this pair at the moment is that you are at a key level. You are at some decent support there. You are come for the past. You can see here now it's been quite nice. The only concern I have with this is there are just better dollar pairs to sell against, and I just don't believe the pound dollar is the greatest in the world. If you are looking to take a trade, if you're desperate to trade, not that I'd suggest you should do, let's take a little look. Now what I've done here is these are two touch trend lines. I'm going to teach some guys here. This is a high volume rejection candle, this is high volume, this is high volume, and this is high volume. That's how you draw two touch trend lines, okay guys? Don't just draw them because you think they look good. Draw them because they're accurate, and this is the accurate picture we're getting. That's a falling wedge pattern at the key level of 1.26. So you may want to, if you're really inclined, to come back, wait for the trade to come back down, test this area here, make a double bottom pattern, and then buy the pair. You could do that. For me personally, I don't want to. That's not the way I trade. Don't think it's the greatest in the world, to be honest with you. There is no substance for me to take a trade on pound dollar at all, especially when we're going to look at other pairs which are so much better. So Kiwi dollar, and what we've got here is this. This is what I actually outlined last week, fair enough, on a daily perspective later on. So this is a 4% trade, this would be roughly. Notice the stops below this low here. We had a break and retest of the trend line, not as cleanly as I like to. That's why I never actually in the end took any order on Kiwi dollar. So this trend line here, if you go back to last week's video, this trend line here I've just extended, nothing more than that. And what we've done is we've come down to test 1 hour 50 MA back up, come down to test second time, chop down, double bottom pattern, move back up. So if you, for me personally, this is a good 1 hour break and retest now. Double bottom pattern, higher low overall. The 4 hour chart itself, again though, this is the same. Look at the volume. The bullish engulfing candle, super high volume, breaking the 4 hour 50 EMA. And then we're moving back down again. So for me personally, you could actually take a trade there, wait for the pullback to a little bit more value and go from there. It would be quite a nice trade. You could just move this up to here, this stop. If you're going to do that, put the stop there at least, make it a little tighter, get some money out of this one. And just trail this candle here, for example. Bring this down here a little bit. It's a 4.5% trade. So you could just take the trade on Sunday, let the spreads die down a bit and take your trade after that. That's a good little trade. If you come off to the weekly chart here as well, you can see at the moment we've got these little tweezers at the bottom, which is a beautiful trade to take. RSI is at 0, so that'd be something I'll be looking at, especially on Sunday. But unfortunately, I've got a lot of dollar short positions open, which I don't really want to hold on to too much. So dollar Swiss, I didn't actually tell you, I took another short position on dollar Swiss last week. I did, and let me explain why. So the first position we took from up here, it broke down and I got out before this key level here, 1.01 area. The reason why I could see that it being the first major key level for me to actually trade for, I didn't want to trade for it, and the daily 50 EMA. Now what's happened is, there's the upward sloping trend line now, thank you. The price reacted against the upward sloping trend line, then broke back down again, okay? Now I actually took the trade at the very, very top here because I just felt that it would actually move down lower. So I decided that once it did break round and put a pattern in, I think it would break it down. It broke down, popped back up, tested the daily 50 and had a bearish engulfing candle, good volume again for selling the dollar. So although I would have said get out at 1.0, I'm just going to trail my stop now a little bit and see how far this trade can actually go. So for me personally, we're going to be looking at something around this area here. Let's look at the weekly chart now, and you can see here we're going to approach this weekly upward sloping trend line, which will be about 0.996 roughly, I think, by the time we get to it. And 0.996 is just in the middle around here somewhere. So we've got a few more pips to go, maybe 40-50 pips to go, but that's what I'll be looking for now. Would I take the trade now? No, I wouldn't, because you're just stopped at this 1.0 level, which is key. So I wouldn't want to take the trade now. So if you got in around this area here a few days ago of the day 50 May or last week some point, good trade to hold on to at the moment. If you haven't, or you've got a poor position, just cut it now, because You don't know what's going to happen. And like I said, we've got this weekly upsloping trend line. We're going to start heading into next week as well, which is something you do need to consider. Dollar CAD, let's just go repeat dollar CAD. Load of rubbish, ignore, move on to the next pair. That's that one sorted. Dollar yen, we did say daily 50 EMA breakdown. Didn't test it like we did last week, but it has broke down again. So we've definitely got some dollar bearishness into the market. Also notice now as well, we have formed a lower high. There's a lower higher, double top, lower high. So we are breaking down now bit by bit. So the next target would be 107. Definitely 107 would be the next target. And then it'd be around this area here at 104, 105, 104 area. That'd be, so 105/104.8, sorry. That'd be my next kind of go after this. This super low test thing here was just one of these things. That's just the market that's taking your stops out, which was this candle here, 2nd of January, the first day in trading that was. So yeah, ignore this so far. We're definitely a bear trend mode on this dollar yen. Dollar SEK. Now, annoyingly, I had my order up here, breaking down bit by bit. It'd be a good little trade. We got out by now as well, but definitely as a good trade to look at. Gold, we got gold right again as well. We want to go long gold. Again, I didn't take this trade because I've got euro-dollar long, I've got dollar Swiss short, and also got the stock market, and I've got Aussie dollar long as well. So I'm heavily selling the dollar, so no more dollar short positions at the moment. But gold was a perfect example of where you want to get in. Again, I wouldn't take it now at a key level. If we just zoom out very quickly, yeah, you're at a key level there. I wouldn't want to take that now. If you get rejection of this level, it's rejecting the key level, so I wouldn't want to take a trade there. The US30 we told you about a few weeks ago. This is the position now. I think the position is just dropped down all the way. At the moment, I'm targeting 10%. At the moment, I'm roughly 2.5–3% in profit right now. So I'm going to start moving my stop down a little bit so it happens. What I would like to see now is this: a couple more days move down, then pop back up, test the daily 50 EMA, and I'll put a third position in this trade now. So this trade could be running, actually in all fairness, I could get a big percentage of this trade. Be nice to see that one. So they're the dollar, all the dollar pairs that we're looking at. Like I said, I think you missed most of it this week. You have. If you haven't got on the pairs I've got, then fair enough. If you're trending, I do believe the dollar will be short this week coming. But just obviously follow your strategy, look for the trend changes, look for the confirmations, and go from there, guys. Okay, thank you very much. Take care. Bye-bye.